which country you're dialing it from. It will give us a good understanding of where all our students are coming in from. So very quickly in the chat window to all 50 of you and counting, if you can let us know which city you're dialing in from. So we have Ajesh who's from India. Hello, Ajesh. Thank you for joining us. Along with Ajesh, if the others, this would also serve as a good audio and video test on my behalf. So we have someone again from India, Snehal from India. Which city in India are you dialing in from? Anyone from outside of India who has joined us, if you could also let us know in the chat window. Wow. So we have Eric from Ghana, Kumasi. Okay. Arnav also from India, someone from New Delhi, Snehal from Karnataka, and the list goes on. I am sure students from the length and breadth of this country, as well as students from Africa, are really, really keen on this very, very exciting masterclass that we have today on alternative matrix, illuminating investor insight or leading them astray. So what we are going to be talking about today, or what we are going to be doing, is we'll be diving into what alternative measures are and how people are using them. So by people, what I mean is investors and analysts, and how do they use this to get a better understanding of a company's story beyond what the official reports have to say. So I'm going to wait for a couple of more people to join in. I can see a lot of you who have dialed in. We'll wait for a few more students to sort of come in. And like I said, it's a very, very insightful masterclass, which is brought to you by William and Mary's Raymond A. Mason School of Business, the second oldest institute of higher learning in the USA, a public Ivy, which is a prestigious public funded university, which is known for providing Ivy League level education and academic excellence, right? So I see we have around 120 of you who are in the room. I'm very quickly going to introduce you to the panel today, the speakers for today's session. We have Dr. Smith with us, who is the Chancellor Professor of Business and the Vice Dean for Faculty and Academic Affairs. She has over 40 years of teaching experience in accounting and is currently heading the role of Vice Dean for Faculty and Academic Affairs, and is a very, very recognized authority in her field. She's received multiple teaching awards and has a rich background, including serving as an academic accounting fellow in the SEC's Office of the Chief Accountant. Thank you so much, Dr. Smith, for joining us today. Along with Dr. Smith, we also have Professor Moyers, who's with us on the panel today. He brings in 38 years of experience with the international public accounting firm of KPMG, one of the big four, and I'm sure a huge target for most of the people present in the audience today. He has served in a number of leadership roles, including the national sector leader for private equity industry practice and office managing partner, along with a lot of other credentials to his name. We also have Amanda Barth on the panel with us, who takes care of the recruitment at William and Mary. I've had the pleasure of meeting Amanda in person on her recent campus tour to India, where we interacted quite a bit, visited quite a few campuses through the length and breadth of the country, and got to know each other and all of the students a little bit more better. So before I sort of dive into the masterclass today, I am sure all of you in the audience is very, very keen, is very, very excited about pursuing your further studies abroad. So I'm going to start by launching my first poll question for today, which is on your screen as of now. So for all of you in the audience, if you could let me know, which William and Mary's Raymond A. Mason School of Business program are you most interested in? Is it the Master of Business Administration, which is the full-time MBA? Is it the MS in Business Analytics? Or is it the Master of Accounting? So if all of you could quickly go and cast your votes and let us know which out of these three programs, and I know it is a tough choice, but if you could let us know which out of these three programs are your choice of interest, or is a program that you are looking to pursue. I'm going to keep this poll question on for a little bit more, wait for a few more people to cast their votes before I sort of end it. I can see a couple of more people in the audience who've joined in. So if you could quickly go to the poll question, which is on your screen, about which William and Mary Raymond A. Mason School of Business program are you most interested in pursuing? Is it the full-time MBA, the MS in Business Analytics, or the Master of Accounting program? I am now going to quickly end the poll question and announce the results. Okay, so the results are in front of us. 56% of the audience today is interested in pursuing an MBA, closely followed by an MS in Business Analytics, and then the Master of Accounting. So thank you, all of you who've casted your vote. Without further ado, I now hand over to Dr. Smith to please enlighten us with a very insightful presentation on today's masterclass topic.
Good morning, and I'm so happy to be here. This is really a great opportunity to talk with you and to hear your questions. So I'm going to share my screen, and then we will get started. So we are going to talk about alternative metrics, but what's really important about these alternative metrics is what they accomplish. Do they illuminate investor insight, or do they lead people astray? So what we're going to do is we're going to begin. These alternative metrics are called non-GAAP measures. I'm going to tell you what that means here in a little bit. And as I just mentioned, there are very different views, sometimes violently held views. I think they're misleading. I think they're just allowing us to con people. No. It's really important that we have these alternative measures because they remove things that we shouldn't consider in reflecting future performance. Sometimes you could get into some serious arguments about this. Now, what we're going to talk about here is what goes on in the process of dealing with these alternative measures. Now, these are mainly accounting issues. Now, do accountants have a place in the MBA program? Of course they do. Accounting is critically important. And in the MSBA, and of course, in the Master of Accounting. So when we think about accountants, what we think about is the fact that they are the people who keep financial markets safe. Now, that sounds like a very bold assertion, but I believe it strongly. And so what happens is the accounting folks are the ones who keep the financial information flowing, make sure that it is correct, make sure that we can rely upon it. Now, the US version of making sure all of this happens is managed by the Securities Exchange Commission. And the Securities Exchange Commission manages these alternative measures or non-GAAP measures. So what are they? Well, they are numerical measures of a registrant's historical or future performance all right, now I know there's a lot of words on the right-hand side of the page, but basically they exclude things that are usually included, and they include things that might be excluded. Now you see that term GAAP? For those of you who have a background in accounting, you know what that means. For those of you who don't, it means generally accepted accounting principles. And so what that means is those are the rules that we use to try to make sure that financial statements, when you look at the first company and the second company and the third company and the 101st company, that they are all using the same sorts of rules to calculate their net income, to report on their wealth, and to report on their cash flows. So what happens is the SEC is in charge of these non-GAAP measures. And examples of these non-GAAP or alternative performance measures are listed at the bottom of the screen. You may have heard the term EBIT, earnings before interest and taxes. You may have heard EBITDA, earnings before interest, taxes, depreciation, and amortization. You see that third one, adjusted earnings? Oh my gosh, adjusted earnings can mean anything, all right? Core earnings, adjusted revenues, free cash flows. These are some of the alternative measures. Now, why do we care about these alternative measures? I mentioned the term generally accepted accounting principles, and we already have all of those rules, but these alternative measures are being presented by companies that are not generally accepted accounting principles, and that's why we call them non-GAAP financial measures. So what that means is that all of the folks who work in the accounting profession and all of the auditors work very, very hard to create really, really solid information. And then the companies come along and say, I think we're going to make adjustments to that, and we're going to present those items as well. Those are the non-GAAP measures. So a little bit more about that. This is technical terms, but for those of you who are interested in regulation and in the securities markets, they should be very important terms. So these are the things that the SEC does. They have regulations, and on the left block, you'll see that they have a Reg G for non-GAAP measures. And then they have their regular regulations, SK, and they have made different rules about these non-GAAP measures. Now notice, the SEC has not said, thou shalt not use non-GAAP measures. They haven't said non-GAAP measures are bad. They haven't said non-GAAP measures are evil. What they have said, which is their standard operating procedure here in the US, is that if you're going to use these measures, then what you want to do is you want to disclose enough information about them so that no one can sort of feel misled. So in the middle block, you'll see here what kinds of things you have to disclose for these measures. First of all, you have to show the comparable GAAP official measure, all right? You have to start with that one. So you can't just sort of make stuff up and put it in a document somewhere. You have to start with the official audited GAAP measure. And then, oh, this is a beloved thing. Then you have to show a reconciliation. So if you want to show a non-GAAP or alternative performance measure, you have to start with your, say, net income. And then you have to show all of the adjustments you make before you get to your alternative measure. That's what Reg G requires. Reg SK and then our 20F things say that you have to disclose your GAAP measure with equal prominence. You can't just put it in teeny tiny little print at the bottom and then show your non-GAAP measure in a big bold print at the top. And you have to actually justify why you're using these measures. Okay, so now, but that wasn't enough. So this came out, oh gosh, I think in like 2004 eventually, sorry, at the beginning. And there were all these questions. There were so many questions from users, from preparers of financial statements, from analysts, from finance experts. So the US, the SEC, created these things called C&DIs, or Compliance Disclosures and Interpretation. And so these are a series of Q&A information that allows companies to go and try to figure out how they should present this information. Two important sentences at the bottom, two very important sentences. In the US, the SEC enforces this. So if a company comes in and starts doing crazy things with their non-GAAP or alternative performance measures, the SEC is the one who writes them a letter and says, you're not doing that. You can't do that, and you have to fix it, and so forth and so on. So the SEC is the enforcer. Now, the second sentence at the bottom is also critically important, and we'll talk a lot more about that in a little bit. The non-GAAP measures are not audited. Financial statements are audited. That's part of what makes them reliable. That's part of why people can use them with confidence. But these non-GAAP measures are not officially audited. I want to give you an example. All right. Those of you who are interested in any of our 3 degrees will find yourself faced with financial statements. You will, if you look in the middle, you will find yourself faced with financial statements such as the income statement, called here the statement of operations. On the right, you will be looking at a statement of cash flows. And what I don't have here is a balance sheet, but that's okay. And then on the bottom left, you will see a whole bunch, many pages of notes to the financial statements. It makes you want to cry sometimes, but that's okay. These things are very, very important. Up here in the upper left is an example of what I've been talking about. It's an example of a reconciliation for the non-GAAP measures. So look at the very top item there where it says net income or loss 5.6. That is the GAAP measure. Okay, notice that it's negative. All right. No, now go to the bottom, adjusted EBITDA. That is their chosen non-GAAP measure. They chose that measure. They view it as meaningful. They think it's going to be meaningful to analysts, to other users, investors, etc. Notice 167.3. That's interesting. So there is quite a big gap there. So the measure that these folks chose, I want to emphasize this because we'll talk about it a little bit more later, is EBITDA. And then all of these items in the middle are the adjustments that you're going to see people making, all right? So, for example, they went back and they sort of adjusted for income taxes. They adjusted for interest. They adjusted step down depreciation and amortization expense. Why do they do this? They do this because in many cases, analysts believe that this number here at the bottom, the 167.3, is more useful in predicting future earnings than this gap number at the top. Now, again, you'll have a lot of argument about this, a lot of argument, but still, that is why companies do it. And then companies in a particular industry will all start doing similar kinds of non-GAAP measures, not completely. Now, why are all these little boxes on the slide? Well, the reason is that we have to think about these adjustments, not just what measure did they choose, EBITDA, but we have to think about the different adjustments that they choose to make. And if you want to think about whether or not these are reliable, one of the ways that you can do that is by seeing if you can trace them to financial statements or to the notes. For example, look at interest expense. You see that, 44.9? Come over here in the middle, and right about in the middle of the consolidated statements of operations, you will see that number, 44.9. Okay, so now I have a little bit of comfort that at least I know where that number came from. Look at the depreciation and amortization expense up on the top reconciliation, 115.6. Okay, well, where is that? Where is that? Okay, look clear to the right for the statement of cash flows, and you will see, yep, there's that 115.6 near the top. So what happens is, if you can trace these numbers, and if you can feel like the numbers that are part of the adjustments for the non-GAAP measures are indeed audited numbers on the financial statements, then you may have more confidence. But you know what? They aren't always like that. So it might be that you will have a reconciliation and it will show depreciation, it will show some number, and you can't find that number, all right? You can't find that number in the cash flow statement. You can't find that number in the notes. You can't find that number. And that is because they have made adjustments to that number. I'm not saying that that's necessarily bad or evil, but it is the fact that you are going to have less confidence in that number if you can't find it somewhere else. So this is just a simple, straightforward, believe it or not, example of a non-GAAP measure. Let's go ahead. So as I said, we have to discuss the measures. One of the questions about the measures is where they're reported. In the US, these measures are reported in the MD&A, the Management Discussion and Analysis, which is not part of the financial statements. They are disclosed in analyst presentations and sometimes in earnings announcements, all right? So they're disclosed in a lot of different places, and it matters where they're disclosed. If something is disclosed in the financial statements or the notes, then it's part of the audit process. If not, it is not part of the audit process. Okay, what types of measures? We've talked briefly about that. I mentioned the idea of adjusted earnings. So if you see someone who is reporting adjusted earnings, that basically means it's whatever they want it to be, okay? They've taken their net income or net earnings and they've adjusted it, okay? So that's not an official term. It's not defined under generally accepted accounting principles. It's just something a company uses. We've also talked briefly in our example about how transparent are the reconciliations in the sense of whether we can find the adjustments. But sometimes that reconciliation that I showed you, which is very detailed, has line by line things, sometimes that is not very clear. It will just say net income, adjustments, adjusted EBITDA. Well, that's not very transparent. And that's one of the goals that we have in accounting and financial reporting, is to be transparent so people can use it. Okay. And then what is the impact of the measures? Now that one is kind of interesting. We've done a whole study on this, and I'm only sharing this one result with you about how non-GAAP measures impact. You notice in our example that it went from -5 to like positive 100 and something. Well, so how many companies report non-GAAP measures that are greater, that are bigger numbers, more positive? You see a lot, whether we're talking about US companies that file 10Ks, international companies that file 20Fs, or other international companies that don't have anything to do with the SEC. A lot of those non-GAAP measures are bigger and more positive. Then one of the questions is, now I showed you the example where we went from a negative to a positive. So how many companies do that? You may be thinking I'm going to say a lot, but actually not so many. So about 12 to 14% actually move from a negative GAAP number to a positive non-GAAP number. Again, what kinds of adjustments? What do we need to think about with regard to these adjustments or exclusions? All right. What kind of things? You saw some examples: interest, taxes, depreciation, amortization. Other things that companies will use for these adjustments are stock options. If you know anything about stock options, you may know that companies get, a lot of people don't think stock option expense should be on the income statement, so they'll add it back. How transparent are the adjustments? We've talked about that. And then what is the impact of income-based measures? Those are all questions and issues. All right, so concerns. I'll circle back to the concerns. All right, one of the concerns about using non-GAAP measures is that adjusting a component of the income statement, that they might be just really trying to meet some benchmark. They might be trying to meet some goal so that they can get bonuses, the internal people, or they might be trying to meet some benchmark that analysts have set up for them. In other words, it's not that they really believe this non-GAAP measure is the right number, but we're trying to meet some benchmark. A second thing is we can, because there's not a lot of regulation around this, we can see non-GAAP measures being calculated differently from one year to the next within the same company. That's kind of frowned upon. So then we can have non-GAAP measures that lead to comparability problems, not only within one company over time, but also you can compare different companies. One company might say, this is EBITDA. Another company might say, this is EBITDA, but they calculate them differently. So we do have some inconsistency going there. Now, this last one, if you're not in accounting, you probably won't understand, but most of the, well, no, that's not true, some of the folks that are really, really concerned about these numbers are concerned because the accounting folks make a new rule where they think it's going to report, say, revenues more clearly, more reliably, etc. And in fact, they don't. And in fact, these non-GAAP measures really decide to undo those things. They decide to reverse out. All right, now, very quickly, this is a very, very interesting issue. Internationally, this is an even bigger challenge. Why? I said that the SEC basically manages this process and regulates it in the US. There is no international regulator. So internationally, we have many countries with many different regulators, and they have different definitions of non-GAAP measures, if they define them at all. They have different requirements for the reconciliation, and they have different restrictions. So the folks who set accounting standards internationally is the IASB, the International Accounting Standards Board, and they decided to address the use of these measures. And I have Mighty Mouse there for any of you who know Mighty Mouse, because here they came to save the day. All right, now, the Primary Financial Statements Project is basically, this is a very simplified version, but it's basically going to require companies to disclose their non-GAAP measures. Where? Remember I said disclosure was important. Where? In the financial statement footnotes. And that includes the reconciliation. So instead of just disclosing it all over the place on your website, in this, in here, nope, it's going to have to be in the financial statement footnotes. And this means that non-GAAP measures would be audited. They've never been audited before. And so for those of you who love Scooby-Doo, so the answer to that is a ruh-roh. What does this mean? This actually is a very, very big issue. And so now we're going to hear from Professor Moyers, who is going to share with us from the perspective of an auditing expert, how to think about these things. And the first question that we have for Professor Moyers is, what are the challenges in auditing a company's choice of non-GAAP measures?
Well, thank you, Kim. And before we talk about this question, let me first talk about what is an audit. So Professor Smith talked about the fact that when companies have stock traded on a securities exchange, they have to file financial statements for the investors to see, and those financial statements are required to be audited. And that includes the basic financial statements and all the information in these footnotes. They have to be accurate and they have to be complete. And so they're giving an opinion that they're an independent auditor, that they're giving reasonable assurance that they're fairly stated in accordance with some accounting standards, which in the U.S. is U.S. GAAP, and which in international markets it might be international financial reporting standards. So those things are audited by the auditors. And so she talked about the fact that maybe in the future, this non-GAAP measure might be in the footnotes, which would make them subject to audit. Now, the first question here is, well, do auditors currently have any responsibility with respect to these non-GAAP measures, right? Because they're not in the financial statements, so we know they're not audited. But how you may or may not know that any information that is included in a document that includes the audited financial statements is required to be reviewed by the auditors. So if these non-GAAP measures are in the 10K, in the management's discussion and analysis, the auditors are in fact required to read them and determine whether they're inconsistent with the financial statements. And if so, are required to report that to the board and to the audit committee and to get that resolved. So there is some very limited current responsibility for auditors with non-GAAP information if it's in these documents, but it's very, very limited. So if we were to move to having these measures audited, it would be a substantial change in the assurance that third parties would have in relying on this information. So the first question here is, well, what if the auditors were asked to give an opinion not just on the calculation itself, but on which measures a company decides to show? And so if you were to look at different companies, you'll find many companies have very different kinds of measures that they show. Even companies in the same industry may be showing different kinds of measures. One may be showing an EBITDA reconciliation, another one might be showing something called free cash flow. And so the question is, well, what's the challenge if the auditors say, well, we want you not only to audit the accuracy of the information, but to audit that the company chose the correct measures. And so that, you can imagine that would be very challenging for several reasons. One, we do not have a framework. For accounting standards, we have these generally accepted accounting standards that tell us guidelines. Now, within current accounting standards, there are alternatives, right? We have different methods that we can cost inventories. We have different methods that we can use to depreciate assets, but we have guidelines that we can, as auditors, can apply to decide, are they applying the appropriate choices? So it would be very, very challenging. So to have the auditors give an opinion on the choice means that someone would have to come up with a framework of definitions of measures that would be appropriate in certain circumstances. And that might also mean limiting the number of choices that were available to companies if you're going to ask auditors to audit those. And I think the other thing that Dr. Smith talked about was consistency between companies. That would have to be part of the process. So I think it would be very, very challenging to think that auditors would be asked to opine on whether the company chose the correct measures.
Thanks a lot. I love that word, opine. Every once in a while, I would say to my children, I'm going to opine on your behavior, and they would just roll their eyes at me. So you have to remember that. That's a very important word. Question 2 is, what are the challenges in auditing a company's adjustments that they use to calculate their non-GAAP measures?
Yeah, so this is a little more doable from an auditor standpoint, right? If you're saying, okay, you've got this measure, let's say there is a definition of that measure that somebody has put out that's consistent. And right now, there are no consistency. I think Dr. Smith talked about EBITDA, which people generally understand how that's calculated. But I think in her research, you'll find that different companies include and exclude different items to get to EBITDA. So in auditing adjustments, there's sort of two pieces that an auditor might be asked to do. One is, well, is that adjustment, can you agree that to the company's records? Does that amount that's in the measure agree to the company's records, and is it accurate? And that would be relatively simple to do for an auditor. But more importantly, the question might be, did they include all the appropriate adjustments to the measure? In other words, did they include all the items that should have been included? And did they exclude any items that should have been excluded? And so again, that is something that an auditor could do, but you would need a framework or a definition of what that measure should be, and would be a fairly significant expansion of the auditor's responsibility to get that done. One of the things that the SEC guidance talks about is, what's the definition of whether an item is recurring versus non-recurring? And they have some guidance that says, well, if it's expected to happen again within the next couple of years, or it's happened in the last 2 years, it's probably not non-recurring. And so if you had some guidelines like that, you could then audit these things. But it gets back to things that Dr. Smith talked about, like stock compensation. Well, it's stock compensation is required to be included in financial statements. Why is it appropriate for that to be an adjustment? And that would have to be also factored in. The other question that some people have raised is, do the accounting standard setters have the jurisdiction to mandate non-GAAP measure definitions? Do they really have the authority to do that? And I think that also might be something that comes up at some point as they move forward in these decisions.
Thanks so much. Question 3 is, so overall, what are the pros and cons of auditing non-GAAP measures?
Well, I think with anything, and you talked about this before, that having transparent, reliable financial statements are the core of any effective and efficient capital market, right? And so having information that can be relied on, and the reason that you're able to rely on audited financial statements is because you have an independent auditor who's giving an opinion, some assertion there that the financial statements can be relied on. And so you don't currently have that with non-GAAP measures. So certainly having that measure available to the public means that you would have a higher level of trust and confidence of stakeholders in that information. It would also likely result in more discipline in management's process. They knowing that it would be subject to an audit means they'd be a lot more careful about the way they prepared those measures. The other thing that it would help ensure, and you talked about this before, is it's not only important that these measures are appropriate and accurate, but they're consistent across time from period to period, and that they can be compared between different companies, because as people are evaluating financial statements, they're not necessarily looking at them in a vacuum for a single year, but looking at trends over a period of time, or comparing multiple different companies who are competitors in the industry. And so I think it would also, encourage consistency and comparability to those measures. Some of the downsides might be that to make these measures auditable means we need to come up with definitions and a framework. And so that might mean limiting the number of measures that are available to companies. And so there might be fewer of these measures available if you're going to require them to be audited, and that may or may not be valuable to stakeholders if they're looking for other kinds of measures that management may use. It's also, there also is a feeling sometimes that if once an auditor puts an opinion on financial information, that, particularly with non-GAAP measures, that financial statement users may think that that's a stamp of approval, that this is a good measure to use to measure the company's results, and may over-rely on measures that may or may not be the right measures to use to value the company or to evaluate the results. The audit opinion doesn't say you should use this. It just says this information has been subject to procedures and it's accurate in some level. And so that could also be a downside.
Thanks a lot. This is great. So we don't know exactly how this is all going to work out. As I mentioned earlier, the International Accounting Standards Board is pushing more toward the audit of these measures. Analysts sort of want there to be sort of more flexibility, if I would say, and probably so do preparers, meaning the companies that produce the financial statements. In the US, the accounting standard setters are also sort of starting to look at this and wonder whether they should follow in the footsteps of the International Accounting Standards Board. So a very interesting topic. I'm going to sort of quit sharing my screen now and turn the discussion over again to Professor Moyers to talk a little bit about our program.
Thank you. And let me see if I can share my screen here. Kim, are you able to see that?
Yes.
Great. Okay, so good. So I'm going to spend a few minutes and thank all of you for joining us today. And you can see both Dr. Smith and I are sort of accounting nerds. We love this stuff, and we love teaching students and helping them learn about it. So it's very interesting that the topic that we talked about today. I want to talk a little bit about our school. I'm going to talk specifically about the Master of Accounting program. We also have Amanda Barth, our Associate Dean of admissions who can talk a little bit more about both the Master of Science in Business Analytics and the MBA program. Since I'm the faculty director of the Master of Accounting program, I'm going to start with talking about that program. But again, just first about the program, and you heard this at the beginning, William & Mary is a public use research university in Virginia on the East Coast of the United States. It's the second oldest institution of higher learning in the United States after Harvard. It's what's called a public Ivy. So there's some Ivy League schools that are private institutions, but they're what are called public Ivies. There are only 8 of them, and William & Mary is one of those, a very prestigious university. We also carry the AACSB accreditation. It's the highest level of accreditation for a business school in the United States. And so our business school, along with our accounting program, are separately accredited. So it's a very high level of accreditation. Let me spend a minute talking about the Master of Accounting program, just a few highlights. Importantly, for those of you on this call, it is a STEM program, which means you have an opportunity for 3 years of OPT. What that has led to, of course, means that we have had the ability to place 100% of our graduates in jobs by the time they graduate over the last 3 years. What we have found is that employers are really willing to hire students from our program, and in particular, international students, because they have this 3-year OPT opportunity. And as you may know or may not know, the demand for accountants in the U.S., and I think this carries across the world, but certainly in the U.S., the demand for folks with accounting skills and accounting degrees far outweighs the supply of accountants. So many of our students are getting multiple job offers prior to graduation. We have a very low faculty to student ratio. So if you come to school in our program, and I think this would be true in our other programs, you would get a lot of personal attention to and access to faculty on a one-on-one basis. People who enter our program, almost all of them are interested in achieving the CPA credential in the U.S. We work very carefully with our students to make sure they're prepared for that exam. We have a faculty member who's designated to work with our students to think about how to prepare for that. We have a very high pass rate there, and that is a credential that has incredible value anywhere in the business world, not just in accounting. In general, we're seeing our graduates currently with starting salaries of $75,000 US. And that has moved up substantially and will continue to move up because of the supply and demand misbalances, with a very rapid salary progression and career advancement. Just real briefly about some of the details of the program. We have a program that's designed with a fall semester that's focused on core advanced skills for accounting and taxation and analytics, and a spring semester that allows students to specialize. And so if you're really interested in valuation or in tax or in analytics, we have additional classes that you can specialize in at your elective. We also allow our students to take electives in our MBA program as well as in our law school here at William & Mary. 3 really interesting co-curricular activities that we think stand out for our program. One is something called a winter internship. We have an opportunity for students as one of your electives in the spring to elect to go to work for an accounting firm for the first half of the semester in the spring, January through the middle of March, and work for an accounting firm. During that time, you'll earn some college credits towards your degree, as well as being paid by that firm. And in most cases, those students earn $10,000 to $12,000 US to help defray some of the cost of their education. We have a great program called the DC Trek, also an elective. Professor Smith, I think, started this a number of years ago, where we spend 3 days in Washington, DC, visiting regulators that oversee the accounting profession in the U.S. Professor Smith talked about the SEC. We meet with representatives there, including the Chief Accountant's Office. We meet with the U.S. Treasury Department, the regulator over the auditing firms, as well as the national offices of most of the major accounting firms. We have all the major accounting firms recruiting on our campus. The majority of our students end up with one of the big 4 accounting firms, but others go to either next tier or smaller firms, depending on their preference. We also have a program in the spring called Sprint Week, which is a hot topics program where we're covering whatever is the most topical issue in the industry, but that might be sustainability accounting, it might be cyber security, it might be cryptocurrencies. And so we've got something that's really relevant that we bring to our students that they can bring to the marketplace. This is just a quick overview of qualifications for admission. We take all majors, so you do not have to be an accounting undergraduate to join our program. Over 50% of the students who join our program were not accounting majors. There are prerequisite courses you need to complete. We do offer those prerequisite courses in an accelerated format in the summer before you begin, so we'd love to talk to you about it if you're not an accounting major, but you're interested in our program. We have rolling admissions, so we review applications as they're submitted. Students can enter the program either in the fall, that fall program starts in late August, or in the spring, that program starts in late January. So for the application, you can see here the key parts of the application that you need to complete. You can see at the bottom an application fee waiver. Each student is automatically considered for some amount of merit scholarship based on their overall application qualifications. So Amanda, let me turn it to you to see if you'd like to add any color to the admissions process or talk a little bit about the other two graduate programs that we offer.
Yes, thank you so much, Mark. If you'd like to stop the share on your screen, I can jump back on video. I'll give you a moment to do that. And hello, everyone. Greetings from Williamsburg, Virginia. I'm not sure if you can see me yet, but I'm Amanda Barth, the Associate Dean of Graduate Admissions. And as Sabahat mentioned, I was able to participate in the SEED Global University Tour throughout India. I've also recruited throughout West Africa this fall. We are very welcoming of our global candidates. I'm going to briefly talk about the two additional options available for global students in our portfolio. We also offer a Master of Science in Business Analytics. Similar to the accounting program, the MSBA is a STEM-eligible graduate degree. It runs over the course of 2 semesters, but is also OPT eligible. So our students in accounting and MSBA are eligible for work authorization to sign on with a great company for the year after they graduate. And if you work for a STEM organization, you can now extend your OPT for 2 additional years, totaling 3 years of work opportunity in the United States. Our MSBA is a very exciting curriculum at William & Mary because a third of the curriculum is focused on areas such as AI and also machine learning. Our students are able to accelerate their preparation for the MSBA program by also finalizing prerequisites before entry. Our prerequisites can be completed in a boot camp on campus or also done beforehand in online. So the MSBA is also open to all majors. The career opportunities for an MSBA are very strong. In fact, data science is the #1 growth area for employment opportunities in the United States. So our students find gainful employment upon graduation. The average employment rate is 94% out of our MSBA, and the starting salary is typically averaging around $88,000 US. In addition to our specialized masters, of course, we run a full-time flagship MBA also at William & Mary. The program was established in 1966, and we boast some very strong rankings in the full-time MBA space. We're ranked number 34 in Poets and Quants, number 36 by Bloomberg Business Week. And as we mentioned, we have some amazing faculty at William & Mary. Our faculty consistently rank in the top 5. They're voted number 5 for outstanding faculty by Princeton Review, and for 3 of the last 5 years have ranked #1 by Bloomberg for learning outcomes and teaching excellence. The full-time program also offers 5 different areas of specialization. So for students interested in areas such as consulting, corporate finance, business analytics, marketing, and innovation and entrepreneurship, there are some wonderful opportunities in the full-time MBA. The biggest differentiator in the full-time MBA program is our students' ability to go through the learning experience on very tightly crafted learning teams with the support of what we call executive partners. We have a network of over 100 retired and semi-retired senior executives who share their expertise in the learning community within the business school. And every one of our MBA students is paired with an executive partner coach to take them through their first and second year of MBA study. Some wonderful career outcomes for the full-time MBA program as well, sending students to top companies such as Google and Amazon, Deloitte, Booz Allen Hamilton, wonderful opportunities in finance with companies like Citi and JP Morgan and Bank of America. Our average salary for a full-time MBA program is around $115,000 US. And for our full-time program, we do encourage students to come into the learning experience with work experience under their belt. So we usually look for around 2 to 3 years of average work ex for students coming into William & Mary for full-time study. I'll also very briefly mention that we have some combined degree programs. So you are able to couple your Master of Accounting degree with a business analytics degree. You're able to pair a Master of Accounting with an MBA or an MSBA with an MBA. We work very closely with students who decide within the learning experience that they want to go deeper and stay longer with us in the graduate learning community. Additionally, our partnership with SEED is a very special one, and we've established a pipeline through the admissions process where you as candidates will be able to work directly with our team. We will offer you special admission consideration due to your affiliation with SEED. We will offer a baseline scholarship in all of our programs at a 25% scholarship by being affiliated as a SEED candidate. So we really do look forward to working with you. You'll find my graduate admissions team is very welcoming. We'll host webinars throughout the spring. We can sign you on for one-on-one information sessions, but we truly look forward to partnering with you on your journey towards graduate study in the United States. Sabahat, I'll hand it back over to you, and so we can maybe perhaps get into some Q&A with Dr. Smith and Professor Moyers. Thank you all.
Thank you. Thank you. Thank you so much, all three of you. It has been wonderful, very insightful. Before we sort of jump into that very quickly, Amanda, if I can just share my screen very quickly to everyone in the audience. William & Mary has some special scholarships just in partnership with SEED for the attendees. And just this morning, Pranav Janani from Jai Hind College, who happened to meet Amanda during one of the campus tours, has won 100% scholarship for the Master of Accountancy program. Apart from this, there are 2 more full scholarships which are available, which are still up for grabs. And there are other exclusive scholarships in tie-up with SEED Global Education, which all of you are eligible for. I am going to quickly post the link to that in the chat window, so all of you can have a look at it and please apply to these scholarships. So thank you so much. With this, I would now like to move into the Q&A session. We have received quite a bit of questions, and thank you everyone for posting these questions. So I am going to take up a few questions one-on-one, and Professor Moyers, Dr. Smith, whichever one of you feel like going ahead and answering this question, please feel free. So our first question is from Ajesh, who's asking, how does a company ensure transparency and provide clear disclosure while using non-GAAP measures? And what steps are taken to help investors understand the rationale behind the adjustment modes?
Sorry, I had to unmute. This is a very interesting question, and many companies consult their auditors, even though, as we said, the non-GAAP measures are not audited. There's still a lot of discussion and review. In fact, I've had one of my colleagues who is an audit partner say, "I'm so tired of being asked about non-GAAP measures." So the concern about transparency is there. One of the other things that companies will do is they will, of course, meet all of the expectations in the US of the Securities Exchange Commission. One of the things we've found in our research is that international companies seem to also be following some of that lead in terms of also doing the same kinds of things that the US companies are doing and that the SEC requires and that certain European countries require. because I think they do view it as transparent and as an important investment of their time.
Okay, thank you. I hope that answers your question, Ajitesh. We have a similar question from Chetna, who wants to know, how can students actively engage in understanding the complexities of non-GPA measures beyond theoretical knowledge? Are there opportunities for them to, let's say, review case studies or any practical projects which can enhance their understanding in this particular department?
So I really like that question. That was my favorite question. And here's why. We are often engaged in research on this and other topics, and we often ask students if they're interested in participating. We have research assistantships, graduate assistantships, so students can come and get paid to work on these research projects. In fact, we had a whole team working on this project about non-GAAP measures a couple of years ago, and I came into them and I said, okay, we're getting ready to go over to London, to the IASB, and I need your recommendations for how the disclosures should be better. And they were like, you want us to make recommendations? I said, yes, you've been reading all these disclosures. You guys have been trying to document this consistently across companies, across time. You're the experts. So tell us. So they sat down and very nervously said, well, I really wish it was this and this and this. And we literally made up a sheet of recommendations, which my colleague and I then took to the ISB and said, all right, we have some folks who've spent a lot of time on this. Here are their recommendations. And so not only do you get sort of potential for practical experience, and of course we have case studies throughout the program, but this is a particular thing. But sometimes your ideas even get sort of moved up to the highest level on the accounting in the accounting world.
Thank you. Thank you. Chetna, we really hope that answers your question. The next question that I'm going to be taking up is from Erin, who says, I have a BSc in information technology. The program involved a semester course in accounting. Is this enough to apply for a master's in accounting? And of course, the question then moves on into scholarship. But if we can answer this bit, then I would request Amanda or someone to sort of come back on. I know we've spoken about scholarships in length, but Amanda, once again, just for the live audience, if we can, a lot of questions, as you can see, are revolving around scholarships. So if you can speak a little bit more about the scholarships that William and Mary Raymond A. Mason School of Business has to offer the students.
I can. And the first question was about the degree background. And I saw Dr. Smith shaking her head that, yes, we welcome a variety of degree backgrounds, especially when they have some quantitative components that lines you up better for opportunities throughout the business portfolio. Again, in regards to scholarship, we are pretty generous compared to other universities for scholarship opportunities. You have to apply to be fully considered in a holistic evaluation. So we look at your academic transcripts, where you went to university. I am very familiar with all of the global schools that most of you have attended. We also will consider any campus engagement that you might have had, internship opportunities, or if you are a little bit more seasoned, we'll look at your professional experience. We can't really estimate right now what your scholarship package will look like, but again, we're pretty generous in our Master of Accounting, our Master of Analytics program, and our full-time MBA. But on top of that, this is a huge investment in you, and you need to consider the overall return on investment in anything that you do in life. So one of the things that I always counsel my global students on, there are also 2 global loan providers that are partners with William and Mary, and we've established agreements with both Prodigy Finance and Empower Financing to support our global students with loans that do not require a cosigner in the United States. So these are very low interest loans that students can generally pay back over a 10-year repayment period. I certainly know it's not the culture in India or West Africa to borrow loans, but it is the culture here in the US. It's a very responsible way to borrow a sum of money to support up your education, your living expenses, and any other unmet need without putting the burden immediately on you and your family. And then the idea is when you graduate with a very strong Master of Accounting degree and you have this earning potential over your early career to earn, $70,000, $80,000, $100,000 plus eventually on your way towards $500,000 in accounting, or in the MSBA program, if you graduate and have a salary of around 90,000 US dollars, that is how you then immediately pay back the loans that you've borrowed over a 10-year period. We did mention, and I saw this question again, both accounting and MSBA are STEM designated. So that means you will be guaranteed a year to work with a strong US company. Those opportunities are paid. Mark mentioned some of our Winterfield studies and our internships in accounting. Those are all very handsomely paid. And companies in the US, because we have such a great need for your global talent, they'll also offer what are called signing bonuses. A signing bonus can be anywhere from 10,000 US dollars to 35,000 US dollars based on what we've seen. So I hope I've demonstrated that it is okay to make this investment in yourself. This is a very strong ROI, and William and Mary has an incredible graduate career management team and organization to help you have a successful landing when you graduate. I hope that helps.
Thank you. Thank you so much, Amanda. That was really, really insightful. The next bit of question that I want to sort of take on is, a lot of people have asked questions regarding eligibility for CPT and OPT. One of them being around, as an MS in accounting student, am I eligible for CPT and OPT? Another one being, is it 3 years of OPT or 1 year after MS in accounting? So can we shed some light on the whole OPT, CPT
Yes, absolutely, Sabahat. This is our world as well in admissions, career management, and as our faculty will guide our students. So students are granted 1 year OPT after accounting and the MSBA. And we mentioned them being STEM designated. So what will happen is, if you go to work with a company like a KPMG or an EY, and they have you in an accounting role, they can demonstrate that that is a STEM job opportunity in the US, and that's how you get your extension. So again, you do have to work with a STEM company, but those are very broad. Amazon, Google, Microsoft, all the big accounting firms have positions that qualify as STEM. So initially, you do get a 1 year OPT. Because the degrees have the STEM code, you're able to extend for 2 years, making it a 3-year learning experience. But it's not a 3-year OPT. It's a 1 year OPT, which is optional practical training, plus the 2 years for the STEM designation. It's been hugely advantageous, again, to the United States and to our company's hiring power of global talent.
Great. Thank you. Thank you so much. I see another question here from Nikita, who's asking, is a full scholarship available for MS in Business Analytics program? Yes, there is. With SEED, William and Mary does have 100% scholarship available for the MS in Business Analytics program. Nikita, I've posted the link in the chat window. Please click on that and have a look at it. That should help. We have another question from Krishna, who wants to know how IR, integrated reporting, would sort of have an impact on the future of accounting, etc. If Professor Moyers or Dr. Smith would like to take this one up.
Well, that's a good question. And that has come up with the regulators here as they've looked at these non-GAAP measures. Are companies going to go to this integrated reporting, which includes, in addition to financial information, would include governance and sustainability and sort of broader measures? And as you may or may not know, the US is looking at requiring additional sustainability climate change disclosures for companies in the future. But at this point, that kind of reporting is optional. It's not required, and it's similar to non-GAAP, and there's no stated framework. So I think those are the kinds of information that investors are looking for. The question is, will there be a framework that provides consistency across companies, so you have consistent measures, as opposed to company, with the sustainability reporting that currently goes on in the US, it's similar to non-GAAP. People choose what they want to disclose, and so there may be measures that are important that are not being out there. So I think at some point, for it to really be valuable, you need some kind of framework that provides consistency across companies, but it would be very, very valuable. And then the question would become, okay, can we get some kind of assurance on that from an independent auditor so that I can be confident that that the information can be relied on?
Thank you. Thank you. Krishna, we hope that answers your question. The next question is from Eric, and I'm going to sort of broaden this question a little bit. He wants to know, is there a waiver for the English language requirement qualification, namely TOEFLs or IELTS, if a student is coming from an English learning background, which means that their medium of education has been the English language? They could be from India or Africa. Is there any specific sort of waiver
Yes.
for that?
Yes, again, we're very globally, culturally competent at William and Mary. So yes, if you've been studying in India or West Africa, we fully realize that English is the primary spoken language throughout the countries. And so we do offer an IELTS, TOEFL, Duolingo, and PTE waiver. So please don't feel that you need to submit that. We also do interviews of our students. So our AdCom is able to deem you admissible via admissions interview, where we'll have a conversation. But do take your time with your essays. That's another really good indicator for us of your written communication skills. And we do take the essays very seriously in your packet. I thought that might also lead into a quick question. We also accept the 3-year BCom degrees in India. We're, again, very knowledgeable about the Indian curriculum. We've been recruiting in India for over 30 years and in West Africa for almost a decade. So again, very, very knowledgeable about our global partners and institutions around the world.
Thank you. Thank you so much. I am very conscious of the time. I know the time is up, but if it's okay with you guys, can I just take 1 or 2 more questions very quickly? I know, Amanda, all of them have been kind enough to drop their contact information below, so you can get in touch with them. My next question is from Priyank, who wants to know, how many credits will a postgraduate course from William and Mary sort of offer them, as he is currently doing his CPA from the US as well?
Absolutely. I'll let Mark jump in and talk about the credit hours. And then Mark, if you want to talk a little bit about how any prerequisites factor in, that would be great.
Yeah, so the Master of Accounting program requires a minimum of 30 credits for the program, and you can take more than that, but that's the minimum. For CPA eligibility in the US, that process is managed separately for each state, but in general, they require certain specific classes be taken and a certain number of credits in business and accounting. And so we work individually with each student to ensure they have the appropriate courses that they're taking during the course of our program to have that eligibility, if that's something that's important to them.
Thank you. Thank you so much.
Can I interject one more thing,
Sure.
Sabat? So we mentioned earlier that students are welcome whether they have an accounting background or not. We've had people who have studied physics, people who have studied Russian literature, people who have studied all kinds of different things. In order to get folks ready, if they don't have the accounting prerequisites, we do have a boot camp that occurs the summer before the students begin in August. And that will get the students not only ready for the curriculum if they haven't had those prerequisite courses, but also they get credit for it. And that's important also, going back to what Professor Moyers was saying, in meeting the requirements for the CPA exam.
Thank you so much, Kim. And then the MSBA program is also 30 credit hours, and the full-time MBA program is 59 credit hours over 2 years.
Great, great. So I think that sort of answers Aman's question as well, who said, I have graduated from IIT. How can I apply for an MBA? What is the cost? I'm sure Amanda has been kind enough to drop a link with the details, but I think the answer is yes to that as well.
Yes,
am I right,
and
Amanda?
we love our candidates from the IITs and the IIMs in India. So please apply. Jump right on. The round 2 application for the full-time MBA program is January 8. You still have plenty of time to put together an application and to work with us. We'll accept global apps for full-time MBA until March to allow enough time for the admissions process and your visa application. So please apply. We love all of our partner universities in India, but hat off for being an IIT or an IIM. That's a lot of hard work.
Thank you. Thank you so much. I'll take the next one up from Mary Ann. the Wes evaluation transcript, yes, please do send it across to our scholarship evaluation team at Seed. Someone from the team will be able to guide you and help you with that. I have put the link. I'm going to take one last question before we sort of close up. Well, Ishan has asked about the significance about the letters of recommendation. I'm going to sort of make this a little bit more relevant. Can you talk a little bit about the number of letter of recommendations that you would require, and are there any specific ones, any specific type that, yeah. So if you could
Yeah,
go
a very
into a little.
straightforward answer. We require 2 LORs, letters of recommendation. You will actually put the email ID of your recommender into the application portal. It'll kick out a template form that they will complete, answering the questions that we're asking. If you're applying for an MS in Business Analytics or a Master of Accounting degree, it is perfectly acceptable to have an academic recommender or a professional recommender. If you're applying for the full-time MBA program, we prefer that there are 2 professional recommenders if possible. So don't overthink it. Ask 2 people, however, that can first give you a positive recommendation, and second, somebody who really knows the quality of your work and your character. It does not need to be the highest ranking faculty member at your university or the highest ranking supervisor. It simply needs to be someone who has managed you or has been able to assess the quality of your academic study or your professional work. Don't overthink it, and have a little fun in that process as well.
Thank you. Thank you so much. With that, I would now like to thank all 3 of you, Amanda, Dr. Smith, Professor Moyers. Thank you so much for joining us today, and thank you for this lovely and insightful session. To everyone in the audience, around close to 150 of you who are still around, thank you so much for staying back. We have posted all of the details, and you will be receiving further communication from Seed about today's session. We will also be sharing a YouTube link for those who might have missed some part of the session today, along with other details. So thank you once again, all 3 of you, and thank you to all our audience. Have a great day ahead and happy holidays.
Thank you. Happy holidays from our side.
Bye.